Sailing through the choppy waters amid rising crude oil prices and US Treasury yields, the BSE Sensex and NSE Nifty notched all-time high levels of 67,900 and 20,200 last week. However, what became the hotly discussed topic was the roller coaster ride in the broader market space. The stupendous rally of up to 30% so far this year saw some signs of exhaustion midweek as analysts warned of irrational exuberance. The indices, however, recouped after lost ground later. Present rally seems to be driven primarily by domestic institutions. Mutual funds saw a record 3.6 million new SIP accounts registered in August, taking the net inflows via the route to 15,814 crore rupees. That apart, domestic institutional investors have net bought equities worth nearly 8,300 crore rupees in September, as against the net sellings by FPIs worth 9,745 crore rupees. Analysts believe these flows will now be a function of the US Federal Reserve's interest rate decision, due on September 20th, which remains the key monitorable this week. According to Chris Wood of Jefferies, greed and fear's base case remains no rate hike at the next FOMC meeting, with the wildcard in the coming weeks remaining the oil price. Back home, experts Business Standard spoke to echoed similar views.
Upcoming federal meeting, we're expecting a pause, and that's what the market is pricing in as well. But the next meetings in November and December, markets are pricing in a hike because the Fed is taking time to analyze the situation and what the interest rates have done so far. And so for investors, Fed meetings, interest rates, and the comments and the factor of inflation that plays into these comments are very unpredictable. So it's best for investors to stay invested.
Technically, the frontline indices may consolidate following the steep rally.
The Nifty is trading along the higher end of the Bollinger Band on the daily chart. The weekly chart suggests that the index may face near resistance at 20,300, whereas the overall mood is likely to remain upbeat as long as the index holds the 20,000 mark. Meanwhile, the BSE Sensex may swing in the range of 67,000 to 68,400 this week. Support for the index is expected around 67,300 and resistance at 68,100.
Today, on September 18, market activity may be tepid, as investors may prefer to sit on the sidelines ahead of the Fed meet. Markets will remain closed on September 19 on account of Ganesh Chaturthi.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.